Hello viewers, in this video we'll be going over natural gas. In this video we'll be going over the day-by-day probability, how we find the models, and we'll go over where natural gas will head to in the next coming days. So back to the technical analysis. Today we're down 5.7% on the 1 hour chart. We were at oversold RSI and we are approaching to positive MACD. However, we saw resistance on the 50 moving average on the 1 hour chart. If we extend out to the 4 hour chart, we are still in oversold RSI, and for the 4 hour MACD, we start to see a convergence. However, it is too soon to tell that we may make that convergence. So on the daily chart, we continue to make lower lows, and we are at oversold RSI as well, and we also made a divergence on the MACD between last week and this week. So we do have a gap down in between from Friday to Tuesday, so that is one gap we do need to fill if we were to continue down lower. So that is our immediate resistance, which is around the price of $2. And for support, if we do manage to continue to head down, we did make a nice reversal over the morning, and the lows would be around $1.83. That would be our immediate support. So if we were to move up higher, that price movement is roughly around 5.9% to the upside, and to the downside it is around 3.1%. So back to the day-by-day probability model. So as the day progresses, we see that on the 7th day we see a 25% chance between the second standard deviation lower and standard deviation 1 lower. We do have a 25% chance that natural gas will head down lower. On the other hand, we do see a 75% chance that natural gas will head up higher in the next coming days. And for the first standard deviation between 0 to 7%, we do have a 63% chance of it happening. And on the extreme case, 7 to 15% chance, we may see 13% chance of happening on this standard deviation. So back to the day-by-day probability model, or I should say forecast model. Again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to July 8th to October 1st, 2010. So let me point out why these two charts are similar. So what we have on the current trend, we start off slightly below the middle Bollinger Band at this instance, and then we made a nice reversal to touch the upper Bollinger Band. Afterwards, we average below the middle Bollinger Band for several days, continuing down lower, and we do manage to touch the bottom Bollinger Band right towards the end as well. So we have those points there, and let's examine the trend in question. We start to see a similar pattern as well. We start off touching the bottom Bollinger Band. We see a reversal next. Afterwards, we see an average above the, average below the middle Bollinger Band at this instance, and then right towards the end, we touch the bottom Bollinger Band. So we have those points. What we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was July 8th to October 1st, 2010. Back then, natural gas continued to head down lower, around 4.7%. So if we examine back up to the probability model, we do see that it meets that standard deviation with a 13% chance that natural gas would head down lower. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.